Okay, so we're just almost a couple of hours into the US main session on Tuesday, the 5th of November. And we've got, as you know, the US elections taking place today. It's possible we'll get the results later tonight. That's likely to be after 11 p.m. UK time, 6 p.m. US time, Eastern Standard Time, but possibly not. You know, they may be delayed. Following that, we've got the FOMC meeting starting tomorrow and then the press announcements on Thursday, where the Fed is widely expected to reduce interest rates by 25 basis points, so 0.25% again, and that's largely baked into price. So what I wanted to do is just take a look at the main US index, the S&P 500, and look at where we are. Now, this is the long-term monthly chart of that index. And if we go back, there's the 1929 crash, if you will, and the bottom of it. And off that, I think that was a super cycle degree, wave 2 low that we saw. And that what we've seen since is all part of a super cycle degree, wave 3. And if that's the case, bear in mind, these are monthly charts, so pretty long-term stuff. 1, 2 at cycle degree, 1 down from super cycle, then at primary degree, 1, 2, 3, 4, 5. That's the 2000 top. And from there, we saw an expanded flat as an ABC correction into the 2009, March 2009 low. So what we're concerning ourselves with now is this move here. And we're looking for 5 waves at primary degree. And when they conclude, that should then conclude the 5th wave at cycle degree, and therefore all of the super cycle degree, wave 3. Following that, we should then see a move back to an area of the vicinity of a 4 of 1 lesser degree. It doesn't have to come quite that low, but into around the area of the 2009 low again. And I've put some labels on this chart. It's available in Trading Vision as a shared analysis. It's the Wave Cycle Trader primary analysis, as well as in the Wave Cycle Trader hub. You can navigate to this. And we had the monetary reset here, ergo Bretton Woods. And what you saw into the decline at the low was single-digit PE levels before we started to see a recovery in the index. Now we're at record PE levels here, even beyond those seen at the 2000 top and the 2007 top before major moves to the downside. We also have the index highly polarized to less than 10% of its stocks that are accounting for a huge amount, over 35% of its overall market capitalization by weighting. And the predominance of those stocks are in a watch list called MAGS, that stands or short for the Magnificent Seven. We'll take a quick look at those in a moment. Now, we are within the vicinity of the top of that move. I do think we've got another pullback and another leg up to come prior to completing that move. So I'm not expecting that just yet, but I am expecting a fairly sizable correction, likely starting next year. Now, if you look at the cycles information down here, the dominant cycle is running at 97 months, and that's already peaked and is starting to head down here. And the low is expected of that cycle back end of 2026. Now, if we add a composite, which is showing that 97-month cycle, and you can see it's shaded red, so it's saying that, you know, that's already in a down phase. The 34 period, which is a 3-to-1 harmonic, is also suggesting that it's peaked, but the 48-month period cycle has not yet peaked. So if I were to come down here and then put the 48-month cycle on here, so you can see that now in green, and there's the dot that shows you where we are. That peaks in Q1 next year. And after that, all of the cycles are pointing down simultaneously into the back end of next year, early the following year, before we get any kind of bounce. Now that's very long term, that's the monthly cycle. If we then come down to a weekly basis, and I'm just going to take the cycles off for a moment, and if I just go here, that's the low that we saw in March of 2009. Counting up from there, 5 up to here for a 1, 2, 1, 2, 3, 4, 5 for the 3 into a 138.2 fib, WXY. Now, that's interesting. That's the March 2020 low. The bottom of it held the 1.0 bottom up fib. That's based on the length of this 1 projected up off the 2, and the X wave of the expanded flat hit the 1618 fib that is the normal expectation for the wave 3 that we missed here. So that's absolutely textbook stuff for an expanded flat. What's then very, very tricky from an Elliott perspective is this final wave. Now, we would expect the 5th wave to lightly unfold as something like a diagonal. That's not uncommon. We also, if you go and read the characteristics of waves, would expect it to climb a wall of worry. And that is exactly, if you look at the geopolitical situation, the economic situation in the major Western economies, not least of which the biggest of those being the US, it's hardly a bed of roses, is it? And the count I've got on here is based on this all being in 3s, where off that March 2020 low, we saw an ABC for a wave 1, followed by the pullback into the October 2022 low being a wave 2. From there, A up, the B wave pullback into the October 2023 low, and then this structure here, which I don't think is quite complete. I think it's got another squiggle to the upside left in it before. This is what I'm looking for next year, and I think it's going to take possibly most of the year. You can see the weekly dominant cycle here is topping out. That's running at 64 weeks. The first trough of that cycle is expected at the end of May next year, and the second trough of that cycle is expected in 2026. So we could get, I've marked it as just a fairly deep correction, but it's a wave 4. Wave 4s are the most difficult and precarious of Elliott wave structures. More than that, it's a wave 4 within a diagonal structure. So we could get something that drags on and on and on and on before a final, we should get a cliff dive element at the end of it for the final fractal, and then up after that. The fact is, we don't know. So we're going to have to lower our time frame horizons to analyze it section by section. It's also going to mean that trading stocks and ETFs is considerably trickier than it has been in a market where dips have constantly been bought, and where the Federal Reserve, whether it be by fair means or foul, has continued to supply liquidity to the primary dealers and the main players in the market at an extraordinary rate. So that's where we are in the bigger picture. Now let's come down to a smaller time frame, and this is our daily chart. Now we expected this to top out the other week, and it's done that. I'm looking for a deeper pullback than the one we've already seen, and then a final leg up. Now that final leg up, the original target was just north of 6,000. There's nothing to say it can't push all the way up here to 64.30 or even higher. So we just get one last blow off move before we start this wave 4 back down in the S&P 500. As you know, the technicals have been, very, very peculiar. This CRSI indicator that we use has picked out the bottom, the top, the bottom, the top of each and every section of this until this last section where it pushed up and we got the everything, behaving as you'd expect here, then here, and then this last 6-8 weeks or so of just sideways chop. This has just drifted in the middle of the range and now come down. If you look at the WC Trender indicator, we've been getting lower highs on it. So we've got huge divergence, sell signals, and we are on sell signals across the board here. We've also got a daily squeeze and momentum has gone negative, but it has not yet fired to the short side. So I'm just going to zoom in on this for a moment before I look at the cycles on it. And if that's a 1, 2, 3, 4, 5 as a contracting leading diagonal, it means that the A wave of the ABC for this fifth of C of 3 is done. We've pushed down and now we're getting a bounce. I think this bounce is corrective and we may well go higher, but I'm looking for this here. The pivot is 5,090. Providing we remain above this wave 4 low here, then I would still expect to see, and ideally it's going to be an impulse structure up, another move up. It doesn't have to reach equality with this move, but that is the most common Fibonacci relationship, where the length of this move is equal to the C wave projected off wherever this B wave comes, and don't rule out it coming deep. I would look for at least 54.72, but we've got 53.79 to 52.66 all possible from here. I'm going to now just add the cycles in for a moment, and you can see that the composite cycle here is suggesting we've still got higher to go before this is done. The slightly shorter term cycle here, this 95 period cycle, is just topping out now, and the larger cycle, the 192 day cycle, doesn't top out until late December, early January. So we've got conflicting directions from the 192 day and the 95 day. You'd start to expect to see that at tops in the market, but what it precludes is a straight move in either direction until they all align, and they all start to align in January next year, and that's when I would expect to see a sharper and deeper sustained move to the downside get underway in the S&P 500. Now, if I take those off, and I just want to show you the sector rotations at the moment. And if we look at the core sector ETF, so that's the 11 key sectors that make up the S&P 500 as a comparative to the SPY, and we look at the weekly charts. And you know, in a bull market that is in a continuation pattern, you would expect to see XLK in here, you'd expect to see XLY in here, and XLF all in the leading sector, the top right green quadrant, those being the 3 largest sectors by market cap. Now, if we look at XLK, this is on a weekly time frame. It's come from improving briefly into leading, and then look at this. The tech sector has been on a relative basis weakest. If we look at the XLF, the financials, and again, brief period in the sunshine as it were, but look at this on a weekly basis, and both of those are still pointing down. They're not even starting to curl across and up as yet. So, you know, those 2 sectors that we'd expect to lead the market, not doing so. XLY had been improving and it gone back into lagging and back into improving. The difference largely being Tesla and Amazon, that are the 2 biggest stocks by market cap in there, having risen since earnings, but we'll take a quick look at those in a moment. Neither of them look like they're necessarily going to continue to support the XLY to the extent they have. The interesting one here, XLE, which is the energy sector, is in the leading quadrant on a weekly basis. Now, if I come down to the daily charts and we just bring that in a time frame, there's XLY coming all the way out of lagging into improving and up into leading on a daily time frame. That, as I say, very much driven in the last week or so by Amazon and Tesla. Now, XLF starting to look like it's going to improve and move across, but it's not there. XLK is struggling all the way over here, and I'm trying to find XLY on here. I can't see XLY on this chart, I'm sorry. Sorry, XLY, we did it earlier, is in the leading quadrant. So it's slightly improved on the weekly, but again, not what you'd expect to see in a healthy continuation to the upside on a straightforward basis in the US indices. Now, for those of you that like the shorter time frames and want to know, what's going to happen tonight, what's going to happen on the Fed, the honest answer is we don't know. It's a crapshoot when you get into things like this. There are 3 possibilities, not 2, for the US elections in the short term. The first of those is that Kamala Harris. The other is that Donald Trump wins, and we get either or result early. Bear in mind that whoever wins the House becomes very important at this stage, because whoever wins the House itself has got to certify, if you will, the election and appoint the new president in January. And there's all sorts of noises about either side saying they won't do so. The other is that we don't get the election results for some time. Could be days, could be weeks. Markets hate uncertainty more than anything else. And if we just go back to the daily chart here of the SPX, and you can see that since this, we've just had this chopping up and down for weeks and weeks since September, realistically, leading up into this election. So the last thing the market wants is continued uncertainty. It would prefer either way for us to have a clean-cut result one way or another. So the first thing to look for over the next 24 to 48 hours is a clear-cut winner, both in terms of the House and also the presidency itself, and for that to be accepted. You don't want to see civil unrest and riots and all those sort of things. In terms of pattern, if that was an A wave, we've had back-to-back 3-wave moves off the top. So we had this ABC to here, ABC back up, and then another ABC down into yesterday's low. And as you know, we're pushing up today. Now, that can count as a wave W. We're getting another ABC up to one of the retrace fibs against this entire move. And I think it's more likely than not that what we're seeing is a correction to the upside. It can come high up to 58.42. It can even come up and double top. But I suspect after it's concluded, we will see another ABC structure to the downside. There's that 50.90.15, the bottom here, that needs to hold in order for this to be counted as corrective. But do make no mistake, it's not inconceivable that this wave 3 is in. I think it's unlikely given the stance of the cycles, but we are expecting a sharp move down into this window here around the mid to third week of November. So another week or so, perhaps a bit more, of downside price action prior to getting that last push up. Now, if we take a very quick whiz through the key stocks in that Magnificent 7 group, this is Apple. They've had their earnings. You can see that it's below the current trend. You can see that we got the sell signal coming off the top on our CRSI. You can see that the Mansfield indicator, so it's relative strength based on relative to the relative strength of the index, is also off. Everything's suggesting that Apple's got a bit lower to go at this point. And there's the key composite that's made up of the 162-day cycle plus its 50% harmonic. It's picked out by the algorithms in the software. It's suggesting that Apple has more downside, but then it's got to move up into, guess where, back end of January in Apple. So that fits very much with what we're looking at. Amazon, So Amazon got that push up on earnings. It's right in a resistance zone, right back up at the recent high. But look at the cycles. They're suggesting sideways, then up. That would suggest that this wave 3 is not in. And if that's the case, Amazon's going to push up to at least 217. It could go all the way to 250. On the last signal, we got a CRSI buy, we've got a daily squeeze in force, and we're on a Mansfield buy, and the trend indicator is still pointing up in Amazon, indicating that this is not yet done. So although it's expecting it to pause here, and the pattern from an Elliott perspective is a real mess. So, I wouldn't preclude maybe an ABC1, A, B, C, and we get a deeper 2, and then we finish the pattern. But Amazon still looks like it's got more upside, just not quite yet. Google looks like it's still got lower to go to me before we start to see that final push up. The final push up, guess what, is expected into around mid-January in Google. Pattern's somewhat messy, so it could well be that this 4 is not yet in Google. It's going to come deeper down towards the 142 area, but I'm not going to get into a deep dive analysis. You've got all the charts within the software, so you can look at this afterwards. The headline being that I think we've still got lower to go in Google before we get that final leg up. In Meta is suggesting that we've still got further upside into, guess what, end of the year. If we have 699 is the next fib up in Meta. So again, not quite done yet, not really indicating a pullback at this point in time in Meta. Doesn't rule it out because there's no harmonic on this that is identifiable. It's the straight 200-day, cycle. Microsoft looks to me like there's a distinct possibility it's topped. The cycle's topped and it's pointing straight down here. So weakest of the bunch is Microsoft, and then we're looking for a move down into the end of the year. It's a question of whether we can break some key support in Microsoft in doing so before we get the next move up. That next move up takes us into late January. So it could be we get a pullback and one last new all-time high in Microsoft before we start a bigger move to the downside. Netflix, you can see here, still expecting lower in Netflix into around the 10th of January. So it would suggest to me we're going to get a pullback against this little move here, then a B, C to conclude this final large move up. 887, 888 would be the final target, but after a pullback that's going to take us into around the 25th of this month before we get anything kind of bounce. Nvidia. Now, Nvidia is a peculiar one here. I'm going to do another analysis shortly on Supermicro that has earnings this evening, and I'm going to include Nvidia as part of it based on the investigations going on with the SEC and accusations of channel stuffing against not only Supermicro, who are the current focus of the SEC and whose auditors, by the way, have resigned. So it's going to be interesting to see how their earnings report is received tonight, considering they currently do not have an appointed set of approved auditors. But they are inextricably linked with Nvidia, who stand potentially accused of exactly the same behavior. But with Nvidia, it's possible that this goes a lot higher. I think it's unlikely. I think if we're going to go higher, we get the rest of this move up, and that's all of a fifth. We don't subdivide again. So 165 area would be the top of it. There is also the possibility with Nvidia that it has indeed already topped, and that what we're seeing is the beginning of the A wave down of a much larger correction. What I would suggest to you is either way in Nvidia, that the next move down is going to be enormous. I think it takes us all the way back to at least $30 and possibly lower. If you look at the weekly chart of Nvidia, momentum has been coming off for the whole of this move really that we've seen this year. And look at the CRSI, we've got a diverged CRSI sell signal. We're about to get a Mansfield sell signal, and we're right at the peak of the weekly cycles in Nvidia. what it's suggesting is a bit more of a pullback into the end of November and then a final push up next year before we start the much bigger move down. Hence the labelling where I think we potentially still have a bit higher to go in Nvidia before we start to see this stock come off completely. So that's what I've got in the main index and its constituents. Just for this afternoon, for the sake of being complete, these are the key gamma levels. These are just netted off so you can't see the put-call mix. You can see where we are. We're right at this peak we've pushed up to here at 5770 SPX. Above it, I've got an absolute wall of resistance here at 5780. You can see the put-call mix here. The positioning of dealers has been short-term bullish and massively hedged in terms of the index. Now that makes sense. If you look at previous elections of recent years, or what's typically happens overnight is you get a very sharp move to the downside that then gets bought. And irrespective of which party wins, we tend to get a short-term rally prior to then settling out and finding out what we're going to see after that. So for today, I've got 5770 that we're at, 5780 and an outside chance of 5800 in the S&P 500, which I think is unlikely. And then I would expect to see the index start to come off. Now, if we look at the roadmap, which updates in real time, you can see this is where we are, 58,768, and we are sat on support. Path of least resistance is this black area here up to this key gamma level, and guess where? 5780 to 5785 SPX. So I suspect we've got a little bit higher to go this afternoon, and then likely we start to pull off into the close. And then for whatever you do not have unprotected open positions going into the next few days. It is much better to go in relaxed, don't have an opinion on what's going to happen, and then look at where we are post-Fed on Thursday and into Friday, and perhaps better even than that, look at things next week. Now, the final thing I wanted to just give you is going into next year, given that we're likely to see a trickier environment, what do you do? Where are you going to put your money? Well, here's a couple of ideas. I do think that the precious metals and gold miners are going to see a pullback from here. And if you look at the cycles in GC, it's suggesting so. But after that, I think we see a monumental run up. It's a question of just being patient for the next run up. And I know we've had a hell of a run, but I don't think it's the bulk of it. I think we have a lot higher to go over time. More interesting on the shorter time frame, URA, uranium. Now, as you know, I've been tracking this for some time, and the pattern has been a little awkward. I had been looking to see if we could get this deeper B wave. If that B wave was in here, that's a 1, 2, 1, 2 to the upside setup here in URA. But it's suggesting it may well be done, in which case we are going to see a very strong push to the upside in uranium, and it's going to go well north of $70 if that's the case. Now, if I just bring that down to the daily time frame for a moment, this is the daily cycles. It's expecting a small bounce, then a move down. This move down should take us into around, guess where? Mid-January. Then we start the next leg up. Now, I'm looking for one of two things. Either one of these Fib retraces against this recent section holds, and if that's the case, then we get the buy signals around early to mid-January from around the 26 to 25 area. That then is going to give us a decent move to the upside, where you're looking at, you know, a threefold increase in the value of this ETF. The other area of interest is lithium. So I've added a watch list to Trading Vision, lithium sector stocks. In actual fact, there's a number of those in there are not stocks, they're ETFs. If you go back to the focus list of stocks that I went through some months ago and have done various updates on since, one of the stocks in there was ALB. And ALB, if you remember, we were looking for it to come down and bottom into its 764, 786 retrace fib, and it did just that. It then gave us the diverged CRSI buy signal and the squeeze coming out of it. So if you bought that anywhere near the bottom at around $77, $78, you know, you're up around 30% on that already. And I think we're in for a pullback here. And if you could look at the cycles, let me just tidy that up slightly. We're at just the peak here. I'm looking for a pullback in ALB, and then I'm looking for a third wave up into next year. So the pullback should take us into around the end of this month, and then up big in ALB after that. BATT. Sorry, let me just go back to ALB for a moment and take you to the weekly chart. There's the weekly cycles, by the way, bottoming out right now, and you can see the move up that we're looking for in ALB, and it's huge. You know, if the C wave comes in anywhere near the length of the A wave, it takes us up into the $400 area overall. That's not all going to be in one go, but if you also look at the technicals on the weekly, we've got a weekly CRSI buy. We're about to get a Mansfield buy on a weekly time frame. BATT, excuse me, which here. Now, again, we don't have a huge amount of history, but we've got an ABC down into the all-time low. 1, 2, 3, 4, 5 for an A up, a B back, right into a 764 retrace. Now we've pushed up, we've broken the downtrend here. You can see the move up. There was signaled all along. Guess what? I think we're going to get a pullback, and then if we get an equal move up over time, that takes us all the way up to $27 in BATT. So I'm looking for a pullback here. Again, you can see the CRSI on the weekly chart. It's about to give a sell signal. So now's not the time to get in. If I look at the weekly cycles, it's suggesting we're going to bottom out somewhere in December, and then we should be seeing a prolonged move up throughout the whole of next year into early 2026, with an interim peak in around April and an interim trough in around August time next year overall. Bear in mind, these are dynamic. They'll move around a bit as we go along. But what I would look for here is a bit more of a pullback. I think we're going to get an ABC back. And if that holds and we get another set of buy signals on the daily time frame, then that's when to look for the entry. Again, if we look at the daily cycles, you can see that it's expecting down into that December time frame. So I'm interested in this once we get into December, first to second week of December onwards. We should keep this very firmly on the watch list, looking for the early stages of an enormous move to the upside in BATT. LAC. Again, we don't have much history on this, but what we've got, ABC down, we've broken the trend, 5-wave move up, look for the pullback, and then up. And again, just watch the cycles for the pullback and the fibs. Let me just flip this to there you go. You can see there's the peak. I'm looking for a move back into late December, and then the next move up. And if I take that up to a weekly time frame, we don't have the benefit of weekly cycles in that we don't have enough history to for them to do a meaningful analysis. But what you can see is we do have a buy signal on the Mansfield, and we've broken the weekly downtrend. Okay, I'm not going to go through the others. They're all in the watch list for you, lithium sector stocks and ETFs, and they're all shared analysis. So you can go down to your Trading Vision software and just come down and look at the read-only versions of those analysis that I've just gone through. But what you'll find is a common theme across the lithium sector. Don't go going into all of them. Any two that are the best looking charts that set up best are the ones to look at. And those are potentially going to give us more upside on a less stressful basis than the normal culprits within the S&P 500 that we normally would look at, given the expectation of a larger correction overall.